Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today Mena and I would like to talk about, well, we'll just call it running your own race. You know, in business, there's lots of things we can get distracted by, a lot of mistakes we can make. We erroneously compare ourselves to other people and those sorts of things. So we thought we'd spend a little bit of time talking about some of the mistakes that we've seen people in business make. And then, of course, we'll try and talk about, ways to try and mitigate that. And let me kick it off. I mean, the first one is investing in the wrong assets or maybe the wrong sort of plant equipment or capitalising a business in the wrong way. And a real common one is buying the freehold, the business premises, for instance. The driver behind that often is that rent money is dead money and we're paying all this money to a landlord and it's an expense that we can get rid of. But also, not all property makes a good investment. And in some situations, in fact, many situations, renting is actually the cheapest option. Although it might not seem like that, but, you know, people are starting to experience that with an uptick in things like land tax and all the other taxation and property expenses that come along with owning property. It's really important to understand why you might own a particular asset. Does it stand on its own 2 feet from an investment perspective? You know, if you weren't in that business, would you otherwise invest in that asset? And if not, where's the special value? And for instance, there can be some special value if you're going to fit out a premises and you're going to spend a lot of money fitting it out. You might want to have security, or you do really want to have security over the lease term. So have a really long lease. If you can't get that with a landlord, then maybe you're better off being your own landlord in that situation. But I would say they're the exception rather than the rule, and that's one thing that a mistake we've seen.
Another mistake that we commonly see is people extracting money out of their business without accounting for their taxes or creditor terms and the like. You know, if you have a strong cash flow business, it's very tempting to see money coming in, you know, bank accounts looking quite healthy, but you actually have no forecast or idea of what actual expenses you have coming up. And we see this time and time again. You know, clients don't have enough money to even, you know, pay their quarterly superannuation bill for their employees, and you know, all of a sudden they're lodging superannuation guarantee statements, or you know, they can't meet their supplier terms, which are 30 days apart, because they've ripped out all the money to pay for personal expenses or buying things for themselves. So it's a very common theme that we see, that people don't have a grasp of what their actual income and expenses look like.
And it can't be understated, Mena. I mean, cash flow is the lifeblood of a business, and so it's critical that the owner of that business understands the cash flow. So what is the discretionary cash flow he or she can go and spend on their own personal circumstances, and what's the business's cash flow that's necessary not only to meet liabilities but obviously to grow the business and to ensure that it's safe. Being distracted by shiny objects is another mistake, I guess. Putting it differently, prioritising short-term profit over long-term value. One of the best sayings by Howard Schultz, who built the Starbucks empire, is that short-term profit almost never drives long-term value. And it's so true. I think that the businesses, I mean, there's heaps of examples of businesses out there that prioritise brand value and business value. And if you do that consistently for many years, you build a substantially robust business. But of course, it's always tempting for many business owners to ask themselves, what can they do this week or next week to maximize profit, revenue, or whatever number they're looking at over the next quarter? The problem with that approach, though, is it invites you to make mistakes. They're going to come at the cost of driving long-term value. So understanding where you're heading, having that focus on, what can I do today? It's really the best question. What can I do today so that 5 years from now, I'm going to be in a much, much better position from a business cash flow perspective?
The next biggest mistake we see is what I call the trying to get rich quick strategies, or otherwise coined the FOMO. There's so much noise, I call it, out there in the media of, all these people by the age of 30 or 35 have 50 properties to their name, and all these kind of agendas that they say, we were able to do this by leveraging this, or leveraging a current home, or, putting properties in trusts, or the wrong sort of strategies, just because, allow them more access to funds and allow them to buy different types of assets. There's so many wrong aspects to this, because you can quickly find yourself investing in the wrong type of assets that you've actually overpaid for, that will exhibit no capital growth, and it could end up paying a lot of money just to maintain. So it's important to not listen to all this media noise out there, because you could end up a lot worse than when you started.
Not being able to say no, Mena, is another common mistake that we see. As soon as you say yes to something, you say no to something else. And that's not immediately obvious to us in business all the time. There's lots of sayings, in fact, as soon as you want everyone, you want no one. That's really related to having a strong, well-defined target customer audience. But really sticking to your knitting, understanding what you're good at, what is in your wheelhouse, what can you be tremendous at and drive the most amount of profit doing, and sticking to that religiously with discipline is easy to say, difficult to do, because there's always additional business opportunities or things that you could pursue. And I even find myself, almost 25 years later after starting my business, contemplating these things from time to time. And whilst it's tempting, you've got to remind yourself that it's the 20-mile march. It's the things that you can stick to, that you can do consistently well for a long period of time. That's the difficult thing. It's not difficult to do it, that what you're doing isn't difficult, but to do it consistently day after day, that's the challenge. And being able to say no, having the foresight to say, look, this is not in the plan, this is not in the purview of where I'm heading with this business, is really critical skill.
The final mistake I'd like to highlight is the wrong type of integrations. Jim Collins wrote a book called Good to Great, and he highlights how the largest Fortune 500 companies, how they've survived over time and what they've done in terms of vertical integration. And they always stuck to their knitting. They never veered trying to go into a different type of business line that's not associated with their current business line. And that's always what's made them succeed. So, for example, as a financial services business, we're not going to go into legal practice because, again, that's not our knitting. We don't understand the legal legislations around property ownership or conveyancing or anything of the like. So it's really important to focus on your knitting, your cup of tea, because otherwise you'll just end up investing a whole lot of time and effort in another business that could eventually be a greater liability.
So how do you mitigate some of these risks? Well, we think it's really about defining what success looks like for you. And I think the first step with respect to that is not comparing ourselves to others. As Mena reminds me, given I'm decades older than he is, that's back in my day, of course, we didn't have the internet. And so it was really easy not to compare ourselves to other people. But today there's so much information, there's so much written about, this person in the industry doing well, or even they're posting, another saying I saw the other day which is really great, posting is boasting. A lot of posts on social media are really just boasts. And really the most important thing to realise is that there's always going to be someone out there that looks more successful than you, unless you're Jeff Bezos. But even then, there's probably people that have got more money than Jeff. So there's always going to be someone that's doing better than you. You've just really got to run your own race. I mean, you can use them as motivation, of course, but don't necessarily peg how you're going to measure your business success and the value that you've delivered against what they're doing.
And I always say the best person to compare yourself with is actually yourself. Compare where you were yesterday, where you are today, and where you will be in 5 years time. And from there, you'll be able to sort of see your clear trajectory and how you've been tracking against your own goals.
The other thing you need to do is really define what success looks like for you. But I think it's also, the other day I heard something that was really good to also define what failure looks like. And by doing that, it helps you really think about, what does failure look like? Now, of course, we can put some numbers around it. If you lose money in your business over the next 12 months, of course, that's not something any of us set out to achieve. But failure could look like, not sticking to the plan or getting distracted by shiny objects or not managing cash flow well enough. All these sorts of things that you don't want to do. It's good to focus on what you do want to do, but having a clear picture on what does failure look like, when am I going off track? I think it's really useful. Let's leave you with a couple of other things that are going to help you kind of win the race at business. And the first one is really understanding your cash flow. So I guess what we're going to do now is talk about kind of the reverse of all the mistakes that we've seen, but we can't overplay the importance of cash flow management, understanding what liabilities are ahead of you in terms of taxation, POIG, any other financial commitments you might have, and then also any personal tax or other entity tax that might be related to distribution of profit. And then that allows you then to work out, okay, what do I have left over, and how I'm going to allocate that in a way that's going to improve not only my standard of living, hopefully, but also my financial position. Ultimately, that's the whole point of building a business, is that you're building your financial security.
And once you have your cash flow sort of well vetted and you understand where your inflows and outflows are, you need to establish what your priorities are. So do you want to pay down debt? Do you want to invest outside of your business? Do you want to invest within your business? What are your actual priorities? You could have a great business but a huge home loan, and you want to focus on paying that down. What does that look like? How do we get funds out of the business and in a tax effective manner so that you can actually pay down your home mortgage? You want to diversify outside your business. What does that look like in terms of structure and so forth? So you really need to have your priorities and goals written down so that you know what you're working towards.
And sometimes doing nothing is actually something. In fact, I would say often, and this is particularly with investing, not so much with business, but particularly with investing, doing nothing is almost always the best thing to do, because quite often we're reacting to stimulus. And so something changes in our industry or something changes in markets, and we think or we read that change should necessitate a change on our behalf, on our side. But quite often it's not the case. Businesses go through cycles, pricing changes with business. It gets more competitive each year. There's these sorts of trends that have occurred for decades, if not centuries. And it doesn't necessarily mean we need to change. And really it's about sticking to that long-term plan, having a really good vision of where you're going, the type of business that you want to build and how you're going to build that, and not being distracted by the noise of the day.
And diversify outside your business. One thing that we commonly see is that people just focus on their business and maybe their home loan, and once they've got their home paid off, that's all they care about. They've got their business and their home, and that's everything. Whereas, your business can blow up at any point in time. There could be industry disruptors, there could be, legal actions, there could be government or fiscal policy changes. So it's really important to actually diversify outside your business to make sure that you've got a steady income stream should anything happen to your actual business.
A great saying I heard many years ago is that success is never owned, it's only rented, and the rent is due every day. So it's great, and in fact it's important for us to reflect on what we've achieved as individuals and in our business and for our clients and customers and the value that we've created there. It's important to celebrate those things and recognise it, but also understand that, as I said, success is only rented and the rent is due tomorrow. So you've got to wake up and do it all over again in a way that's, hopefully going to deliver just as much value as you delivered today. So run your own race, set your own targets. Don't necessarily measure yourself against the person that looks like they're doing better than you. Doesn't always mean that they are. And build the life that you want to build with the business that you're creating. I think that's probably really the best thing, or the only thing we can all do. And we may as well enjoy the journey as much as possible. Okay, that's it for us for today. Until next week, bye for now.